Top profit investors never follow the crowd. They position before consensus, where opportunity is largest and risk is smallest. Today's strategic allocation, backed by macro capital flows, structural demand, and institutional adoption, is ASML and Bitcoin. Top profit investors allocate with three principles. 1. Profit drivers that compound over years. 2. Assets under accumulation by deep capital. 3. Macro forces that outperform average market cycles. Today's asset pair captures physical technology infrastructure and monetary liquidity evolution, two foundational engines of financial growth in the next decade. ASML Holding is the irreplaceable bottleneck of semiconductor manufacturing, the only company in the world with advanced EUV lithography machines that pattern the most advanced chips ever built. ASML's exclusive monopoly on EUV lithography, essential for cutting-edge logic and AI silicon, means every advanced wafer passes through its tools. Analysts are upgrading price targets and demand forecasts into 2026 as AI and memory capex extend beyond current cycles. Bernstein now rates ASML among the top picks for 2026 based on demand fundamentals across both logic and DRAM sectors. Institutional ownership remains large and growing, with Vanguard, BlackRock, and global strategic funds maintaining significant positions based on long-term secular demand. Advanced logic nodes, 2 nanometers and beyond, require exponentially more EUV passes per chip, increasing revenue intensity for ASML. Global fab capex is forecast to grow significantly into 2026 and beyond, demanding new installations of lithography tools. Top profit investors observe capital. Global funds are increasing exposure because ASML's unique positioning means demand is built into technology infrastructure, not narrative hype. Bitcoin, BTC, is no longer fringe speculation. It is evolving into a macro asset class driven by institutional adoption, liquidity demand, and scarcity mechanics. Regulatory clarity and exchange-traded products have transitioned Bitcoin into a structural investment thesis. Spot Bitcoin ETFs have attracted billions in assets under management, providing regulated, liquid access for major pension funds, family offices, and institutional allocators. Corporate treasuries are increasingly adding Bitcoin as a reserve asset to preserve purchasing power and hedge against fiat debasement. Bitcoin's fixed supply of 21 million coins creates a programmed scarcity. Recent halving events tighten new issuance, while institutional demand creates a persistent absorption imbalance. As professional allocators adopt regulated products and custody solutions, Bitcoin's liquidity and market structure have matured, reinforcing price floors and reducing volatility. Bitcoin is now recognized as its own macro asset, partially decoupled from traditional equities and increasingly integrated into professional portfolios seeking liquidity premium and inflation hedges. Together, ASML and Bitcoin represent two complementary core pillars of long-term capital compounds. ASML captures the real-world productivity engine of advanced technology and AI infrastructure. Bitcoin captures the digital liquidity engine, driven by macro liquidity, scarcity, and institutional capital flows. This pairing bridges the physical and monetary dimensions of global financial expansion, a dual thesis endorsed by macro capital allocators before the broader market fully embraces it. Top profit investors position where structural forces meet deep capital flows. ASML and Bitcoin are not average picks, they are foundational components of the next decade's wealth compounding engine. This is where capital must go before consensus, backed by institutional allocation, macro demand, and scarcity dynamics.